Remember to subscribe, like, and share these videos. Well, folks, in tonight's video, we'll talk about how $95 a barrel crude oil is obviously good for the markets. Not really. Let's get into tonight's stuff. Welcome, everyone. Well, folks, I have been crazy busy for the last 3 or 4 days. I put out an announcement on our Discord, but I will be putting an announcement out on Twitter and via email and some other. But I finally have got our new software up and running. Matter of fact, the reason why I'm so scatterbrained, I've been deploying it, putting it on servers and uploading all kinds of very complex stuff, getting everything set up. We're hoping to have it out sometime between Wednesday and Friday on a preliminary, and then next Monday will be the actual release of the software. I'm actually going to show you how it works tonight, and it's basically the ability for you folks to run your data sheets on your own. I'll just show you, I won't try to explain it. I'll put it up on the screen, and we'll run some sheets tonight, and we'll have data sheets because it only takes a few minutes now to run quite a bit of data. All right, so what I want to talk about tonight is it's fascinating to me. So the market rallies 1% today, and it was funny. I was reading some commentary out there, and people were talking, well, crude oil declined it a significant amount. So it was literally on, if you bring it up on Friday's close, it was $99 a barrel, and it closed today. It's trading right now at 95, and that was worth a 4%, a 1% rally in the S&P. It fascinates me. This is such a unique market that we're watching. There's no reality in this. Must have done a couple of videos on and Substack on no reality in the market. I mean, $95, if I would have told you a month ago that crude oil was going to go to $95 and it was going to be good, then you would have been shocked. But one thing I did tell you is that there was significant support right at the 200-day. And that's basically, we've bounced off of it twice now. So on a daily basis, it looks like, we're going to hold that 200 and trade around here. That's okay. That was well anticipated, I will say. But I think, and I'm going to talk a little bit about the Fed that's coming up here in a couple of days as well. But I think what we're seeing here is just a very confused, bifurcated market. No one knows what to do. Somehow people think that $95 oil, if inflation comes in, that somehow the Fed's going to raise rates and that's going to fix it. This is a completely different scenario, and it's so funny. It's sort of like the tweet that went viral on me. You have 5 million views. It was because no one understands market mechanics. It's amazing. We'll just say market participants seem to be, trying to think, maybe just ignorant. They don't know how things work. There's so many people on YouTube like this right now that are totally clueless on how these markets work and how the mechanics should work in a situation like this. So let's unpack. I did a giant report on crude oil that I released. I thought I was going to get it out much earlier, but I didn't get it out to the end of the day, Friday. It was a very long piece, but I could actually have done as much on each one of the categories. So, but let's just stay on this whole oil at 90, 95 thing. What does this mean? I think the theory is that people couple things. They believed Trump when he said they were ready to surrender, and then he calls everybody he knows on a planet that's got a warship and says, "Hey, can you come over and help us?" Didn't sound like they're ready to surrender. That rhetoric. It was going to be over by this week. Now it's 4 weeks, and I think the Iranians, and I keep telling everybody, you can't really underestimate we'll call it a desperate regime, and I'm not sure they're desperate. I'm not sure what's going on there. We don't have good reporting, I don't think anyway. But most people, I think the oil people get it, and that's why we're continuing to trade here at 95. It'll take one headline to get it back up over 100. But here's the theory, and Trump has said this a number of times, is somehow it's just going to go back like it was. Almost immediately, the war is going to be over. They're going to go, okay, I won't shoot it back anymore, and crude oil is just going to go back to $60, $65 a barrel, and all the pumps, we're printing $5.10 up here, and I don't know what it's like down in the Phoenix Valley, but I suspect that it's probably a little more demand down there than the 10 of us that live up on this mountain up here. So I think what I'm seeing is just this people that think everything's going to go back. If you read that oil report, we're not going back. In fact, I think we'll be lucky if we get much under 70, 75, and that will be for a minute, and it'll bounce back up. I think the shipping channels, everything I talked about in that report is got a lot of chance of being exactly what it looks like, which is right now we've got ships all dislocated around the planet. And I think probably the most interesting thing when I was doing all the research for that report was figuring out how important helium was. I had no idea. Check it out. Just do even a ChatGPT or your favorite LLM. Say, explain all the things how important helium is to this planet. And then you look at this crisis, there's so many layers of things that are, or we'll say, dislocated or broken right now. So I don't see that the crude oil is going to come down or it's going to stay elevated. I do expect when we look in the rearview mirror next week or next month, when we get the CPI and PPI and PCE numbers, they're going to look a lot different. They're going to reflect a pretty decent increases that we see. We were printing 289. Now we're not quite double, but we're up 60, 70% from where we were. So this is all going to come into play. We saw massive, I'm just kind of doing a generalization and we'll get into tonight's broadcast, but we had a massive amount of sell orders hit the intermediate database. I'll go through both the intermediate and the daily. I've already seen today's numbers. We're still seeing, even though the market rallied, we're still seeing patterns breaking and more selling than buying even after today. So everything has just been broken. It doesn't mean that there's a major decline and we're going into a super bear market. Not at the moment. But we've got a long ways to go here before we find out what reality really is. And that's what my argument against the way the markets have been trading is that there is no reality. The way the markets are responding seem quite odd to me. And, so let's do this. Let's go ahead and go through the database, and I'll just let it run as it comes up tonight. But I do think that the markets have some serious reconsiderations to do over the next several weeks. And I'll touch on the weekly chart. So I'm going to do like I used to do. We'll go through the database. Then when we get to the S&P, I'll cover the daily, weekly, and that's pretty much, I've already reviewed, just glanced at some of the charts. the Nasdaq's going to be very similar, and then, like I said before, that whole rotation trade is pretty much broken. Maybe it'll be able to continue to hold down that the Russell and the mid cap will be able to maintain somewhat of a bias there. So, and then after that, I'll try to bring up this new software to show you, and probably in the next couple of hours I'll have it fully deployed. Then we'll get into testing. And if you're on Discord, I screwed up the email I want everybody to use. So check Discord. I just put out the final. I got it right finally. Okay, so let's go ahead and let's take I'll start at the database. We'll take a look at the weekly models first. So we dropped from almost 67% to 38%. And when I go to this all stats page, you'll see it was huge selling here. We had 40, I'm just going to run off 4,300 sell signals. We went from being long, almost 10,000 symbols to long 5,500, and we just saw a massive move there on the percent. We also saw the sectors continue to climb. We're out of capital goods now. We're looking at 6 sectors still long, so there's still some traction on that level. But these models, when you get a tranche of sell orders, you get 4,000 plus. I've seen over 5,000 on a couple of occasions. And when you get this doesn't come back very quick. This is going to take multiple months. And I saw a question, I think somebody asked on Discord, so hopefully you see this, is I've been talking about this June-July rollover. Well, that's off the table. I did address that in last night's Substack. And what I'm expecting now is that we're in a different regime now. We're no longer above 42%. We're basically in a neutral zone. I think just like we're seeing on the dailies, as we come into this Friday, we'll see more selling, more patterns continue to get broken. Is the worst case, 1% rally feels good, right? But it really isn't anything to speak of. I'm just looking at some stats here, and let me just bring this up. So now we're looking at mid caps are back up 1.8%, Russell's up 0.9%, S&P down 2.1%, Dow Jones down 2.3%, and we're almost down 4% on the Nasdaq. So while that felt good today, there's still a lot of things wrong. And like I said, I can't see that a $4 sell-off from 99 to 95 actually justifies much of anything. I guess enough for a trade. A lot of folks are trading the indexes and SPY and what have you, but from a material standpoint, looking at a real true turnaround that is meaningful, we didn't see anything today other than a good trading day if you figured it out. And I also addressed, and I'll go to the daily models here, and we'll talk about those for a few minutes. But I love days like today, especially for our institutional clients that had a lot of sell signals. I love to be able to sell in that up day. And a lot of times it's a good idea not to sell the open, but to sell somewhere in the day if you have individual symbols, or Xing out at the end of the session on days like today, especially with these sustained rallies. But typically in the first couple hours, you'll get a lot better prices when you're getting that big rebound. So most of the folks that have been around me, been with me for a long time, know that's kind of a tactic. And even if you did sell the open as typically instructed or expected, you're fine from that level. So let's go to the daily models. and I'll just bring up the stats as well. We're down to 16.86. We were 18% and change coming into today, but we didn't get a lot. We got 150. Actually, it's kind of a wash, just a slight more neutral to negative on the daily. It's just enough to downtick about 1% on the symbols, but 1% isn't much now. We're only down to 2,389 long signals from 14,172, so not very many. And I think what we'll see here, the only thing left in the sectors, guess what? Energy. That's not surprising, right? We're up 22% on the energy as a sector. Okay, so that's pretty much the database breakdown. We're basically just seeing the database destroyed, both on an intermediate. Like I said, we're at 38%. I doubt if we can even get any buys. So let's, while I'm here, and I should have talked a little bit more about the Fed, so we'll do that while we're here right now. But the Fed's got nothing to do with a supply shock like this, and especially just one market and a war. If anything, they should lower rates. That would be the smart thing, and it wouldn't cause much of anything, kick up inflation any more than what's already going to happen from this oil shock. And like I said, it's not just oil. There's a whole bunch of commodities that are being affected by the war. So I think one of my newsletters I did last week was, don't expect the Fed to bail you out, and maybe they will. I think if anything, people are talking. I was watching late last night, some guy in Asia came up and said, if oil stays up, the Fed's going to raise rates. No, they're not. That would be like suicide. So they're not going to do that. That's not how you fix what's going on. That's not going to do anything. But you already got the prices of oil destroying demand and the markets, and you're going to raise rates and make it worse. That's going to fix something. I don't think so. They have a dual mandate. It's interesting because the ECB only has one mandate, which is inflation. So, but the U.S. has the dual, labor and inflation, and stable prices. So they're kind of out of the ability to do anything in this. Okay, so let's go ahead and move on here. So coming in, so this is we'll start top down. This is a weekly. So you see, we went just under the 200 week average here and bounced off, but we've got this declining 10 here. So the ceiling is going to be maybe 60, it's a funny number, 68.5, which is the number where we traded for literally from October all the way into this recent breakdown that we got in the last couple of weeks. We started to trade significantly under that 68.50 number. So there's really nothing there. We're looking at PPMs. You can see down here the momentum is looking to turn around at the end of the month and at least flatten out. So as I've been talking about, we're going to be stuck in that wedge, that rising 40. This is a weekly chart. Rising 40, declining 10. We just stay in that range. There was no projection. We expanded the range, but that was the likely place to stop. So let's take a look. This is where it shows up pretty good, is right here on there's the 200 day. It's interesting that 200 week and 200 day are similar values right now. So let me just, one thing that did happen on the daily is we got some upward projections. We got some some fib targets on the upside, which is 66.72, 68.43, 68.50 number we were just talking about on the weekly chart, and the upper numbers 60. Yeah, so we're looking at the 69.60 level is the extreme. But this is going to be significant resistance. Probably this red line and the upper 200 is where we end up. That's our trading range. As I was talking about last week, this upward, we come back and look at this PPM 200. It's still positive, still has a nice slope on it. So this was always the scenario was breaking through here. Just to go back to the database just for a second, when you start to see the individual symbols peel off and then the intermediate, all that's telling you is they broke trend mode and they just go neutral. And sometimes adding cash in a period like this, especially, even makes logical sense, because anything can happen with this war. I know Trump's competent. Would you want to see him any other way? The answer is no. But no one knows what the outcome is going to be. And these guys got swarms of drones. I don't know, maybe tens of thousands of these things. There's no telling what they've got buried under the ground. And they're making it an expensive war. So these drones they're flying are like $30,000, and we're shooting $250,000 missiles to knock them down. And yeah, so this is a pretty smart game, and burning munitions as well as money. So it's making it very expensive. So from we can see that right towards the end of the month, looks like we've got a little momentum boost. So that's going to just set us up for trading in these ranges. And I've been saying this for the last couple of weeks. There's no big collapse of any sort. The point of the oil report was there's also not any where it's just going to retrace and everything's going to go back like it was. Nothing's going back like it was. I mean, think about this. The thing that nobody thought about was the risk in the UAE and particularly Dubai. I've been to Dubai. Everybody was telling how it's so safe, and it feels that way. I mean, guys are leaving the keys in their Ferraris. No one's going to steal your car down there. But now we see a different world, especially in that area. And if you look at when I flew out of there, we flew right over downtown Tehran. I was on an A380 and I could see straight down to the ground, and we literally went downtown Tehran and had a GPS map on the screen in front of me. It was never seen that happen. Well, that's not going to happen for a while. I thought it was somewhat interesting the way everybody at least had been getting along down there. So now it's going to be interesting getting in and out of that place. All right, so let's do this. So I am going to I'm going to show you this. This is the login page, and I've just got a quick setup here. So what I'm going to do is let's go ahead and I'm going to do, we're calling this a blueprint. So those of you that get the Substack, kendallreport.substack.com, the ones that get that, these are similar sheets. They're a little bit more going on here from that standpoint. But what I'm going to do is I'm just going to grab a couple markets here, and we'll grab the daily, and you just have to highlight this, but I want you to see this thing. It's way cool. You just dump that data in there, and then you hit validate, and so I'm going to throw a couple in real quick. We'll throw in the NASDAQ. We'll throw in crude oil. This takes just a second to do here. We'll throw in crude, so we'll do NASDAQ and crude here. So let's go ahead and put that in there. All right. So I'm just going to generate these reports. So I just click this, and it tells you what it's doing, scanning market structure, momentum vectors. It looks at patterns. It only takes 2 minutes to run this, but you can run 10 of these things at a time, and it only takes like under 5 minutes to run 10 symbols now. So we'll go back and do a review here while that's running. So let's go ahead while we're doing this and go to the NASDAQ, and then we'll come back and look at these sheets. So this is daily. Same, the caterpillar formation right into the 200. We traded, closed under it, reversed out of it. We hit the basically STX level, and just like there's some new fib targets on the upside, and indicators again, all flat. This is what we've been talking about for weeks. We're still in that regime from a quantitative, but on the trending from the database, we've seen a big switch from there. So we'll let's go to the weekly, because I think that's where we really want to focus in on. So the turnabout is right at the end of the month. Looks like some momentum on a short term. We're seeing that's where this white line is starting to show, where my cursor is here. It's showing a little bit of an uptrend. So from a market regime standpoint, we're not going to go into a full downtrend. The database on the intermediate basically is neutral, 38, it's below 42. 28 is the next trigger point where we start to get into a negative pattern. So basically we went from underlying bid to basically a full neutral pattern on the intermediate charts. And that's what these indicators have been telling us for the last, 5-6 weeks. Most of this year has just been this sideways choppy. So what's a benchmark sheet? I don't know what that is. So you can build as many as these. Let's see, we should be done. Yeah, so it tells you 3 traders blueprints are ready. So it generates the commentary. One thing I should have showed you while it was running, it actually gives you a tagline what's going on. So if you're running 10 of them, it's giving you a little bit of a teaser as it's building. So yeah, so But this is all the commentary. It gives you the probabilities for the range. So right now we're looking at R2 and R1 are the highest probabilities, but you've got probably the ranges are S1, S2 is probably the range. So you probably get some decent volatility out of this, and that will be good from that standpoint. What's nice, once you run these sheets, you can come up top and you can just click on the next sheet. So this is basically NASDAQ is neutral. It's giving you the settings gauges on the composite PPMs, nothing there, and basically on the market grid viewpoint. So there's a lot of data here. So if you've seen this, but what you're going to be able to do is you're also going to be able to run them intraday, 4-hour charts, 1 hour. You'll be able to set up your whole day trading routine here. So NASDAQ 46% bullish, so it's kind of in that range. 82% bullish on the crude oil here, and this will be already. So this is the prototype, but it runs. I've already turned this into deployable software. Matter of fact, I was working on, I got one more thing to finish on the server side to get this thing up. And so I'll be talking to some of you about being a beta on this thing. So let's go back to the markets here. So let's take a look at the 10-year. I thought that this was interesting as well. This is a weekly 10-year, still suggesting much higher prices here. And you can see the momentum, all the PPMs are in alignment. So we're probably going to see continued into 430 plus on this. And this makes sense with the $95 crude oil. We'll do crude oil next after this, and then we'll go through the metals. But the bottom line is this is going to be driving this market for a bit. I know everybody thinks this is going to be short-lived, a 4-week war, 5-week, 10-week, and then it's just life's going to go on as normal. I can tell you enough confidence in shipping channels and everything in the Middle East and around oil has been disruptive. And as I mentioned in the oil report that I did, is I believe that trading partners and how the flow is going to go is going to change too. I think it's going to get very segregated on how oil moves around the planet. Like Asia right now is getting hammered because they get most of their oil out of the Strait of Hormuz. And I was watching something last night that we literally have, they're trying to do everything they can to produce electricity. I mean, a lot of that stuff over there is nat gas, is what's creating the energy. So there's potentially a lot of more things to break if the flows don't get straightened out, and they're not going to be able to get 100% straightened out, but definitely will get things going. So I talked about this before, but we've got 3 fib targets on the 10-year right now: 460, 490, and over 5%. Let me just see where that lands. At 516. Rates aren't going there if crude oil is coming down. There's a lot of disruption here, folks. Don't get too confident about this. Instant everything's over and it's going to be okay. We're going to be talking about this for a while. It looks like the equity markets are probably going to be hanging in there, but we'll see, because this thing, with us starting, if we see further deterioration on the model, on the WaveTech models and what we're holding, and the percent bullish gets even lower on the intermediate, that's going to present a lot of issues as we go forward. So let's go ahead and let's go to crude. This is somewhat interesting. We're getting V tops here on the crude. So the red dots are totally sideways, pretty strange configurations over here on the projected moving averages. But this whole level going flat is right here at $96. And this is what I was talking about. We were on the close, we were $99 on Friday. Right now, last trade is 96. If we bring this down to a daily, you can see it's all projecting just to stay sideways and move and stay above this 96, 98 level. There is a pivot point that just showed up today that's up here at 111, but we're likely going to stay up now. It looks interesting here on the PPMs on the daily, but this looks like a big decline might be coming. Well, the reality is even down here is a 1.3 value on PPM1, and what that's really telling you is that that's still a almost vertical move, even though it's a kind of a natural correction where you'll get momentum to bleed off, but there's still plenty of momentum on this 10-period moving average that is going to be a solid support level, and that's going to run out. I mean, even down here where it looks like super negative is a plus 0.36. So just like any indicator, I don't care if it's RSI or any of these things, when they get too extreme, they'll stay elevated. And all this is telling us is that angle of attack on the 10-period moving average, there's going to be probably less than a 20% probability to close under this. This is a daily chart. So we're going up at a pretty regular rate. So we're looking at 88. In 3 days, the support levels are going to be at 92. So this is why when I started off tonight is I was talking about what's the probability that $95 oil is a good thing. And the reality is it's just going to continue to be kind of, you're going to feel like you're being chased down a dark street because of the way this looks. You're not going to be able to build a lot of confidence in a big equity rally. So look for rejections on the moving averages, the 21. If we get above the 10, 21 values on all the indexes, you're going to most likely get rejections. That goes to that basically that angle where we have the declining 10 and the rising 200 underneath there. Those are going to be support at the 200 and resistance coming down every day on the equity indexes. In this case, the support on crude is coming up every day, and it's substantial numbers that tell us that the probabilities are not very likely that we're going to see the markets get much through there. And if they do, they're going to bounce out of there on the crude, and on the equities, we're going to get rejected off of that downward sloping 10. We could go next level to a 21, but that's going to be a thing for sure. So we'll see how this all plays out. I can't imagine it plays well. So I've received some stuff, some things on X and other avenues, some comments around my environment is like, what's going on with gold? You know, if the war is still kicking up, why isn't gold rallying? I think gold has played out every possible scenario on its rally up, and now we're just consolidating. You can see the indicators, and I talked about this, is we're just going to stay in it's just the same scenario that we're seeing in the equity indexes, and everything's just kind of locked in these ranges right now. And it does look like we've got a potential little rally coming, but most of the play has been played out. This is daily. We'll take a quick look at weekly. I'll do the same on silver. You see we got a little bit of rounding going on here, but for the most part, and I've been talking about this for probably a couple of years, when we broke out of this range down here, we're like 3,400 on gold. This is going to continue. We're way out here. This is Feb 27, where my cursor is out here. So it looks like we're going to continue to rise along here, and maybe gold is the only honest market from the standpoint of this is going to reflect maybe the inflation and things coming out. And in the next couple of days, I will actually bring up CPI. I think I was showing you we're still got a projection for CPI and PCE and all those, where the algos are actually suggesting we're going to see a bit higher prices. Nothing drastic, but that can change if this whole war and this disruption of oil continues. There's going to be a lot of things to consider. Let's just go silver here. I don't know if you folks remember, I was talking about when we got this big spike going back into January, the end of January, is that it was going to take us at least 6 to 8 weeks to get this market grid to collapse in. It's finally there, but we still have a lot of work. And that number up here at 108, 111 on silver, if you see it, that's your ultimate sell point. But it looks like we're just going to stabilize. It doesn't have this, if you look at, we were just looking at gold, you get that big upward slope still continuing, where silver is kind of just losing its momentum and looking to be range bound, but a lot higher than where it was. Instead of being down here at 36, now it's double 70. It's probably going to be the low 70 to 85 range is where we're going to land as far as silver goes, and I don't see much changing from there. What is looking bullish is Bitcoin. Been talking about this weekly. We're going to have resistance along this 21 line. We're looking at minus 217. There's less than a 10% probability to get through right at this 79.81 level I've been talking about. That's likely where you're going to have a ton of resistance. You do have fib targets up here that are suggesting, get that over here, 77 to 83, extreme 88. Certainly could spike up there, but that downward shape angle on this red line, which is the 21, is going to be your big resistance, and that comes in right around 81 bucks, 81,000. So that should be regime, and then I think we are still running this downward slope 21 and the 200. This wedge is going to be there. I don't know if we need to retest the 60,000 level again, but it looks like that's probably pretty solid from that standpoint. All right, I'll come back up. We'll take a look and see what kind of questions you all have here. Yeah. I'm not sure, David Ford, I'm not sure we're even trying to beat Afghanistan. I'm not sure what we're doing. And yeah, Iran is, it's, I mean, the Persians have a millennia of fighting. They're the ultimate warriors in that area for sure. Yeah, let's see, Dwayne, let's see, 401k easy for retail to play the market. Yeah, by the way, the inverse, I don't, inverses don't work very good for hedging, especially in 401ks. Um, yeah, Discord channel is not is a private channel. So if you buy the indicators you get in, it's not a public channel. I may be we're rebuilding the Discord because it got messed up. So I'm going to be launching a new Discord. I don't know if public channels are just brutal. Yeah, so Bitcoin is energy. Yeah, it's a tiny asset though. Let's be real. Bitcoin's pretty much a joke as assets go. They're good trading, but it's not like a real asset. What is it? What? Almost back to 2 trillion. What? 40% of Microsoft or something. It's just like a company. So, but it's a good trading tool. I like it. Let me just see if anybody else has anything else. Yeah. Yeah, you're only, yeah, I won't challenge the Bitcoiners. I, I cover it every day. I think it's an interesting trading environment. Yeah, so Claude, I've become quite the master. When you guys see this thing that's coming out, you're gonna love it. Yeah, Claude Code is my best friend. So I don't know, Ted, if you could explain what you mean, can Bob provide a benchmark sheet? I don't know what that is. That's S&P, right? I don't know. Oh, here, down here, Ted. Okay, I see you again. Yeah, that's coming, Ted. Yeah. So one of the things, just real quick on this sheet that I showed you. Right now, they're individual sheets. But I am working on something where you can combine sheets and combine your different levels of resistance and correlate them, and you're going to be able to ultimately you're going to be able to take sheets and portfolios and combine them into trading, build your own trading strategies. There's some pretty cool stuff I'm working on. What's nice about it is it just depends on tokens. The way I've set this thing up, I'm using an API. So there's a charge with these sheets because you got to pay for the tokens. And I'll be able to get, excuse me, I'll be able to get a much better price on when I get several hundred or 1,000 people using these sheets, because then I've got bargaining power with the tokens. So, but it just it's fairly pricey. I forget how many tokens are run on one sheet. It's a lot. So you definitely don't want to run these things on your own, not at any amount. And I figured out how, like I showed you, we ran 3. We can run batches of 10, and you open up one API and you dump all the data in at once, and it processes it as one session, and that saves a lot of money. So I've researched quite a bit, but I've got a lot of late nights into this thing. Like I said, when I get off, I'm going to take a little bit of a break. I suspect in the next 2 hours I'll have it fully deployed, and while I've already got all everything built out. I just have to put on the front end and the login and the creation of your accounts, and then we're good to go. And I've given a chunk of this stuff away when you sign up. So I think you get to run like 30 sheets for free. So anyway, it's pretty exciting. Mainly because I built it and I was able to put my ideology in there and not trying to communicate it for decades. I've been trying to tell programmers that have no clue what I'm talking about how to get the output. Now I can do it myself, and very empowering. I think this is probably most exciting thing I've done, especially since I've been around this, building software, doing things for a lot of years, trading a lot of money. You know, we traded managed a lot of money, and I've got a whole pathway. You'll see once we got a press release about to come out. There's a new company involved, all kinds of stuff. So it's exciting for me. Let's see what else you guys got. Yeah, so you can run Claude, but you don't have my prompts. That's one of the things that since I built all the technology, I have stuff that I've worked on for decades that you can go right now and just take a screenshot, throw it into Claude, and ask it some questions. But it's all about knowing what to ask. So that's it. Yeah, let's see here. Yeah, that Mista T, yeah, that's exactly how it should work, especially if you're running the intermediate models. Yeah, yeah, I've actually been approached about just building. The problem with building your own database, I have a crazy database, but to build up and it's Claude and the AI that's doing a lot of these calculations and probabilities and different elements. So you still need. We used to talk about this a lot around the shop, especially when we were back in the heyday 10, 15 years ago when we were big time running some huge money, is that you always sometimes you have to have a man in the middle. I'm still valuable because of the experience and the elements that I know that are in there. At some stage, maybe it'll be able to calculate. You know, you see a lot of people, everybody talking about trading models and stuff, but the people that are building these models, they're dependent highly on the AI itself to come up with things. And I'm not saying that doesn't work. It's just that I have found, because I've worked on 3 software development teams in my past 15, 20 years, I know the right questions when I'm developing to ask. But if you have those skills, you're better off. Like a doctor could go in and ask questions about health issues and get better answers than you or I could, because we don't have that background knowledge. And if you have some of that background knowledge and you know how to get these prompts working, then you can do some pretty amazing stuff. And without it, you can still do some pretty good stuff, but with it, it's next level. I'm just looking at a couple of questions here. Okay. I think I went through everything you guys had. Yeah, so I think I understand Dwayne 990's question now. Shorts have not worked well. Actually, I had a huge day on the short side last week. I'm just reading this. I'm just trying to understand the question that's posted here. Too much dollars coming in monthly from 401k, too easy for retail to play the market. Just my speculation. Yeah, that's the point of some of the stuff that we're doing with WaveTech, with the portfolio management. I've got some stuff that I've been working on there. I've been absolutely, I go to bed at 6, 7 o'clock a.m. Eastern time every day. So I sleep 6 hours and back at it. So yeah, it's pretty exciting. Hang on, there's. Yeah, so I remember now, just saw a question. I'm going to have to try to get this, bring up that WaveTech energy portfolio that we built years ago. That thing is killing it. So yeah, I'll have to bring that up. Anyway, folks, we're right here at an hour, so we'll call it quits. Now, it's always right as I go. Let's see here. Yeah, exactly. It's common sense. Of course it is. Yeah. Well, if you saw what this thing did with the database, the decisions it makes is a lot better than you'll ever be. When to buy and sell and which symbols to continue, how to allocate the assets. There's more than just buying a bunch of stocks. So if you think portfolio managers, you buy a group of stocks and equally weight them. Now some are overweighted, underweighted, you're in cash on some. The decisions around portfolio management are very, very important, including when to start raising cash and buffering your risk. So yeah, of course. That's kind of a funny question. Of course it's common, but when does it stop? When do you make the decision to get out? That's where the money's made. That's where the rubber hits the ground. Anyway, folks, have a great night, and I will see you tomorrow. Hopefully I'll have this thing deployed, and soon we're going to have an early adapter, and then we'll be on full release, hopefully within I think April 5, the 5th is where I'm targeting everything. All right, folks, have a great one. Talk to you tomorrow night. See you later. Enjoy the music.